Hello, everyone. Hello, everyone. Welcome to the Money Level Show. If this is your first time here, we think, act, and prosper. This channel is focused on changing financial trajectories and building legacies. So we love that you're here if this is your first time watching. So today, just going to be really quick. I just want to dive into what's happened in the market today. Many stocks took a big haircut and we're down quite a bit. So I actually went in and accumulated some, and so we're going to look at some of these companies and then what news is hitting the market as to why is the market going down. So if you are watching, be sure to hit the like button, drop a comment. Love to acknowledge that you're here. This video is going to be quick, so we are going to get into it. I'm just going to throw on an intro and we're going to jump right into it. So, all right, stay tuned.
Think. Act. And prosper. You are now tuned into the Money Level Show.
All right, we're back. This video is gonna be quick. Like I said, I'm gonna try to make it quick. Sometimes I get long-winded. Be sure to keep me on track because I got to get out of here in about let's say 10 minutes, 10-15 minutes, because I'm about to go play basketball. So you got to take care of your health. That's a big part of wealth. So you got to take care of your health. So let's go ahead and jump into what's happening in the global economy, because we saw stocks were down quite a bit today. Obviously, in the big picture scheme of things, if you've been investing in things that are way expensive with super high valuations, you may not have seen as much of a haircut. But as far as like when it comes to the energy and commodities bull market, there was a lot of opportunities there, as well as some of the other stocks in the tech sector and other value plays. And so we're going to look at some of those. So this is the first article. So stocks sink as China woes spark global sell-off, stock market news today. All right. So U.S. stocks were part of a global sell-off Tuesday as a retail-heavy week began by showing continued consumer resilience in the U.S. So we had the consumer spending data come out, which is super positive for us. But China painted a grim picture for the world's second largest economy. The Dow Jones fell 1%, the S&P 1.2%, the NASDAQ 1%. It says Home Depot kicked off retail earnings week and they beat estimates, but they warned of continued pressure on customers and such. And so pretty much, I mean, they're just giving some background information. So here's where we are here. China's continued economic woes took center stage globally as the country reported a further decline in health for its economy. China's central bank unexpectedly cut a range of key interest rates in a bid to spur growth in its sputtering economy. Notably, it also suspended the publication of its youth jobless data for the month spiraling. All right, so pretty much China, what happened is they cut rates. So when you know like monetary policy, usually the Federal Reserves or the central banks won't cut rates until like there is some type of risk in the market, or there's some type of risk in the economy, or something breaks or whatnot. They may see some type of data and they cut rates. So this is why, because most central banks around the world have been raising rates, which raising rates means that it costs more to borrow. Right. And so when it costs more to borrow, then, companies with a lot of debt, they have to refinance debt, it higher interest rates, it hurts earnings, all these things. And so like, when countries are raising rates, it usually isn't good for, many companies and stuff, and especially stocks. But we've been actually going up in the rate while rates have been rising. And that's mostly because of forward predictions that the Fed won't have too much far. They can't go too much further. Like we're almost at the end of that rope. So usually what happens is the Fed raises rates, they pause for a certain amount of time, and then they cut rates. And they usually cut rates whenever jobless claims increase and they see like, okay, the effects of the rate increases have actually impacted the economy to the point to where we need to cut rates now. And so China cutting rates now, I mean, that shows that they may be having a slowing economy, which means they may be in recession. If China is recession, then that impacts, us, right? It impacts us in a lot of ways. I mean, they're the second largest economy. They spend on our goods. I mean, we buy their goods and such, so like, yeah, we don't really produce much, but we spend money with them and such. And so like, they lose jobs, things like that. So, the economies are like pretty connected. And usually like after China goes through a recession, like usually it impacts the nations around them, especially us. Like it impacts us because we have this kind of intertwined financial relationship. Other news here is Fitch, they threatened to downgrade the banks. So Fitch, they're pretty much a credit rating agency, and so they recently downgraded the U.S. government from a AAA to like a AA plus, because they said that we can't pass bills to get the debt limit increase. The parties don't agree on a lot of things, and then we're spending over a trillion, and we're $1.5 trillion, almost 2 trillion over our budget every year right now. The interest expense that we incur on that debt that we're spending, that budget deficit that we have, and on the debt in general. So Fitch downgraded us. So now they're saying that, Fitch warns it may be forced to downgrade banks. Fitch is warning that it may cut the ratings on dozens of banks. According to CNBC, Fitch cut its assessment on banks in June, but it was largely missed. If it were to be cut again, that would force Fitch to reevaluate its ratings on all the banks it covers. And so in the video above, pretty much they're explaining it. So pretty much, I mean, I think JP Morgan and Citibank and then US Bank and many other banks are in Fitch's kind of like hand right now. And they're thinking about downgrading them. And so because many banks, for those that don't know, when we had the banking crisis back in March, those were banks with high levels of government debt instruments, which means they owned a lot of bonds that were paying like 0 point something percent. And then it cost them more to borrow money, right? It cost them more to borrow money from the Fed because the Fed's been raising rates, and then their assets are only paying them less than 1%. And then you had obviously depositors. They were removing cash from them, so they were having a hard time raising cash. They couldn't really sell the assets that they had because, I mean, the assets that they had didn't really appreciate any value because they bought these freaking 20-30 year bonds that were paying less than 1%. So that issue still exists in the banking system. So many people are still warning that the banking system is not out of the clear yet, even though the Fed has been trying to keep that quiet. So just popping over to some charts. These are some stocks that I actually bought today. These are not, this is not financial advice. So just want to say that first. Actually, let me go ahead and some of these charts, they want you to sign up and all this stuff, and I just don't have time for it right now. All right. So the first one I've been looking at and I've started buying is Devon Energy. So Devon Energy pays a solid dividend, and they've been getting pummeled. And so today they were down another percent. And as you can see, let's look at the yearly charts here. Actually, let me go ahead and I always forget how to look at. Let's go to line. Let's do that. All right, so you can see Devon Energy was at about $77. That's when oil was pretty high then, and then now it's at $49. So it's took a decent haircut, and it continues to go down. So I started accumulating a position. They have a solid dividend, 6.86%. This is more than banks and such, and so they have a solid dividend. However, it just depends on your appetite for energy companies such as that produce oil, right? Uh, Another company that I've actually started accumulating, PayPal has just been getting rocked. PayPal has just been getting rocked, y'all. Um, I mean, obviously, since early a year ago, PayPal was at $100, and currently it's at 59. But if you look at the yearly or the 5-year chart, I mean, PayPal hit as high as 300 and almost $10, and now it's at $59. And it hasn't been at this price since, I mean, even pre-pandemic, it was higher than that. PayPal hasn't been at this price that it's at since about 2017. I mean, so yeah, I mean, this stock is very, very cheap right now. I mean, and even if you look at like they have some decent earnings from what I saw. I don't see them on here. I have to go find that. I'm kind of used to working Yahoo, but sometimes I don't really mess with it. Another company I'm buying, Vale. Vale has been getting pummeled. So they do a lot of production of raw materials, steel, gold, silver. They have a lot. They do a lot. But when you look at their chart, oh, that was what I was supposed to press, chart. You look at the chart over the last, let's see, what's this, over the last year? Yep. So, they hit $19 and then now they're at $12, back to where they were about a year ago. They spiked and then now they're back down. And if you look at their dividends, they pay solid dividend as well. Vale pays about 5%, 5.14%. So they pay a solid dividend as well. So some of these companies have been just getting rocked. So I deployed some capital today. You have to buy when people are fearful. Be fearful when people are greedy. Be fearful when people are greedy. Greedy when people are fearful. And obviously, this could go a lot lower if we have some type of liquidity or crunch or anything of that nature, right? So this is Enbridge. They focus on pipelines and such, and they pay solid dividends as well. As you can see, at their high, in the last year, they were at $47. Now they're at $34. So this is when stocks are cheap. You're supposed to buy them when they're on sale. Stocks are the only, like, probably the least thing that people buy when it's on sale. People will go buy, things, clothes and all type of stuff. Oh yeah, it's a sale on the TV. Oh, Black Friday sale. We'll go buy stuff. But when you see these investments, solid companies on sale, some people, you often run away from them. So it's just a crazy psychology thing, right? And so yeah, so this is another company I was picking up today. And I'll just throw in a little capital in, dollar cost averaging. So like anytime I see some weakness, like we may wake up tomorrow and it may go down another certain percentage because the market's just been running and we need a pullback. So we may see it go take a little more, take another turn down. So pretty much, I mean, that's what I'm looking at. So when I see weakness in these good companies, solid companies, I deploy some capital. And then if I see a bigger move down, like, if there's an event of a liquidity crunch or anything of that nature, then you got to have more capital to deploy. So for me, like, I will put in more money then. So I just dollar cost average. That's my strategy. I'm not trying to pick tops and bottoms because you can lose a lot of money like that, especially if you are trying to say like, hey, this is going to be the top for the stock. Yeah, this is the top. Like many people talk about, Dogecoin and many others, right? Because I had Dogecoin at freaking what was it, a fifth of a penny, right? And I sold it on the way up. It went up to 7 cents. I was like, oh wow, yeah, let me go ahead and sell this, and I got up out of there. I didn't hold it till 70 something cents, right? Obviously, ideal, you want to have enough shares to where you can offload as it goes up, and then even if you miss the top and it comes back down, you can either wait a little while or you can offload more, right? And so you're not going to be able to pick the exact top or the exact bottom. And so pretty much, yeah. Yeah, so pretty much that's what it is. So y'all, I hope y'all having a good day. I'm about to go shoot some hoops, play some basketball. Be sure to be on the lookout for some companies on that are cheap, that are on sale. As you can see, the companies I'm looking at are on sale. I'm not looking at these ones that are very hyped up and are overvalued. I'm looking at the stuff that is on sale. So yeah. All right, y'all have a blessed day. We will catch up soon. All right.